Thank you, Mark, and a big hello from London. Okay, so an interesting series of technical patterns formed last week. In the currencies, we had a weekly key reversal down in euro sterling, a weekly key reversal up in euro yen, and a weekly key reversal up in sterling yen. These are all interrelated and sort of make sense if you think about it, though only the ones against the Japanese yen have seen any subsequent moves higher. We also had weekly key reversals up in sterling against the South African rand and the US dollar against Nigerian naira 1 month NDF. Neither of them has so far this week shown any inclination to follow on higher. Finally, we had a weekly key reversal down in the euro against Hungarian forint, which has indeed seen a follow-on lower this week, immediately. That covers the FX markets. We next had a weekly key reversal up in the Chinese CHINEXT composite index, which has also seen a follow-through higher this week. Interestingly, we did not see any such move in the Shanghai Composite Index nor the CSI 300 Index. Indeed, those other two look weaker now compared to the end of last week, whereas the CHINEXT Index is still a little buoyant. Elsewhere, we had a weekly key reversal down in the Baltic Handymax Index, if only just. Well, this may have been an only just move last week, but it has seemingly been enough to pressure the market lower at the start of this week. There was also a weekly key reversal down in SGX SICOM TSR20 rubber futures, which have had a suitable follow-on lower this week, down to testing the recent lows from early September, around 129. Finally, what I consider to be perhaps the most important series of weekly technical actions formed last week, and ones that stretch across the Atlantic Ocean. We had weekly key reversals down in nearly all the major wheat futures contracts last week. We had weekly key reversals down in Chicago wheat, Minneapolis wheat, Kansas City wheat, and ICE UK feed wheat futures. The only one that was missing was the Paris milling wheat futures, though that has since moved in sympathy. Indeed, all the grains had vaguely similar patterns that saw the market break down out of them and subsequently move lower. In Chicago, it was a mid-August to early October ascending wedge pattern. In Minneapolis wheat, it was an early September to mid-October bull channel stroke ascending expanding wedge pattern. In Kansas City wheat, it was a mid-August to mid-October bull channel. In ICE UK feed wheat futures, it was again a mid-August to early October bull channel. All these four had follow-on lower actions at the start of this week, though Minneapolis and Kansas City have since seen these falls recovered. However, London UK feed wheat still has a significant gapping move lower, and Chicago wheat is also still a little lower as well. I believe that they are all interrelated, as can be seen by their synchronicity, and I will explore this more in my weekly technical grains commentary this coming Friday. I'm always happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London. I hope you found these comments useful.